You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mikey Hu. Hey, what's up, Market Moose? Mike from The Moose on the Loose. Happy Wednesday. Today we are looking at potential not replacement, but equivalent to Schwab US Dividend Equity ETF, the famous SCHD. I've been quite active on the new, not that new, but social media Blossom, Canadian-based, very cool social media. Actually, more positive than Twitter, still a vibrant community around investment. So anyways, I've been there for a while now, for like a couple of weeks. And I noticed that there was a lot of questions around ETF and if there was an equivalent to SCHD. The thing is, if you do not have all like the time, the knowledge, and the interest, mostly the interest, because after that, when you're interested in something, you will find the time and the knowledge to manage your portfolio. Going for ETF is probably like the best route for like most investors, like without any questions. And you could select, like you could go like passive ETF, you could go all-in-one ETF, and you could also select like specific strategies, which is super interesting about ETF is, and at one point is that it has the quality of its default, the quality of its flaws. The problem is there are so many different choices that now it becomes even more complex to select those. So one that is incredibly popular among dividend growers, especially in the US, is to invest in SCHD. This one is that's the Schwab US Dividend Equity ETF. Offers a yield between like 3.5 to 4% yield depending on where you get it. Focused on dividend growers, of course, and pretty solid returns over the past since inception, actually. So this one is quite interesting. When you look at the top 25 holdings, that's usually my first reflex when I look at an ETF is once I get this strategy, I want to know what's inside. You get names that I would not mind holding in my portfolio. Stocks like Coca-Cola, PepsiCo. I have actually shares of Home Depot, for example. I also like AbbVie. I used to have Texas Instrument. Those are all part of like top 25. Unfortunately, there are like some companies that I would not necessarily invest, such as like Verizon, Altria, and the likes. Too many healthcare companies to my taste, but that's just like my personal taste, right? We all have like our personal angles, and that's also fine. So my question was, and that's what I've noticed on Blossom, is was there an equivalent for Canadian ETF? First, unfortunately, I have to warn you, it's really tough when you go into like Canadian world and you look at ETFs paying dividend. All the classic names are going to come out fairly quickly. Banks, energy stocks, pipelines, telcos. It's kind of hard to find something that is a little bit more diversified than the market itself, because all the major big companies are also happen to pay dividends. I mean, not all of them, but most of them. So I started research to see if there was any dividend growth oriented ETF to find something that could be interesting. So the first one, and they're in no particular order, but the first one I want to talk about is the CI Canada Quality Dividend Growth Index ETF, DGRC.TO. I'm going to put them on the show notes. This one, not bad, but a bit heavy on the energy sector. Like the top 4 holdings is actually Suncor, Cenovus, Imperial Oil, and Canadian Natural Resources, so CNQ. So probably not exactly the one that I would pick, mostly because it's of its like big exposure to the energy market. However, you have like some low yield, high growth companies inside too, such as like Thomson Reuters, Intact Financial, one of my favorite, Alimentation Couche-Tard, of course, Loblaws, Canadian Pacific. So you can see that there's a good blend here, but a bit heavy on oil so far. Not too bad though. The second one I've saw was the iShare Core SCI Canadian Quality Dividend ETF. So XDIV. This one includes a lot of like the classic dividend payers though among the largest holdings, and this one, like, it goes quickly. You have like 9% into Enbridge, 9% in TD, 9% in Sun Life, 8.6 in Royal Bank, 8.6 in Manulife, and then 7.9 in Suncor. So you can see that it's like heavily weighted into a handful. Like the top 10 is like more than 50% of the ETF, all classic names that you could probably buy by yourself. A lot of like high yielders, not so much of the low yield, high growth stocks. I mean, you can find like Emera, Magna International, TELUS, Keyera Energy, Quebecor, Canadian Utilities, Canadian Tire. So this one is probably a little bit less geared towards growth, a little bit more about income. I mean, if it's what you're looking for, maybe it's could be interesting. And the third one I've seen, so like just to make a quick summary, the first one was the iShare Core MSCI. No, not XDIV. Sorry, guys. The first one was the CI Canada Quality Dividend, DGRC, focus on dividend growth, a bit heavy on materials and energy. The second one, it was the iShare Core Canadian Quality Dividend Index, XDIV. This one, including most of the classic names, so easy to replicate by yourself. The third one that I found interesting was the Canadian Dividend Aristocrat, the iShare Canadian Dividend Aristocrat, so CDZ. Interesting play here on Canadian Aristocrats, where you have like a more spread out. So the largest position at this moment is Bell at 3.6% weight, kind of like big difference between XDIV that had Enbridge at 9%, and this one, it's like the biggest one is not even 4%. Again, a bit high yield heavy. BCE, Allied Properties, TELUS, Salbo, Fiera Capital are the top 5. So again, you're like more looking into high yield and more dividend growers. So overall, and I know that there are like a lot of like other dividend ETFs in Canada, but unfortunately, I was kind of disappointed about those companies. There was nothing that I've found, and maybe I'm wrong. I'm not an ETF expert. So, I mean, actually, if you found a low yield, high growth dividend ETF, just go on YouTube and put it on the comments there. I'll be happy to review it. I was a bit disappointed about the offer, which was pretty much aligned with what I thought anyways. The Canadian market is relatively small. The candidates are not that many. So it's hard to buy an ETF in Canada. Instead, you could just build your own. And actually, this is what I'm thinking I'll be doing in the future, probably like in June or something, because I already have like a good lineup of topics. But I'm thinking about doing like a video, some kind of like a DSR ETF for Canadian investors. What I would do is I would start actually with the list at Moose Markets, the Rockstar list. So you can go at moosemarkets.com/rockstars. That list includes all the stocks that shows a positive dividend triangle, so positive revenue growth, earnings growth, and dividend growth over the past 5 years. I would start with that, probably make a good mix of different sectors, and select maybe like 30 stocks out of it. Most preferably low yield, high dividend growth stocks, so companies that do not necessarily have a high yield, but will show mid-single digit to double-digit dividend growth potential, maybe more in the lines of like the Thomson Reuters, Dollarama, Alimentation Couche-Tard of this world. Am I able to like select like 25, 30 stocks out of those? Maybe, probably actually. I'm going to do that research, but in the meantime, I would be curious about what would be your list of ETFs of stocks that would do a low yield high growth ETF for Canadian investors focused on dividend increases, like dividend growers. So I will invite you to download the Rockstar list, start your research, and just fill up the comments with whatever ideas that you would add to that kind of ETF. That would be interesting to amass a kind of like a bundle categories and see where could where if we can actually build something that would make sense. So again, to download the Rockstar list, it's updated monthly at moosemarkets.com/rockstars. I'll see you in the comment on YouTube. I'm very curious about your candidates for the DSR like low yield, high growth stocks ETF. That could be interesting to build that. And I'm probably going to come up with one towards June. So, all right, Moose, that's enough for today. Tomorrow, I'm going to talk about a big move that I made recently with my investment. So we're going to talk about that on Thursday. And until then, don't forget to stay invested. Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.